Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Economic warfare. Trump vows an economic D-Day against Iran as Washington shifts its pressure campaign towards Tehran's finances. The U.S. warns countries providing Iran a lifeline could also face sweeping consequences. Bond buybacks. U.S. Treasury Secretary Scott Bessent makes a fresh attempt to rein in long-term borrowing costs, sending Treasury yields and the dollar down. And the AI race tightens. China's low-cost models are rapidly closing the gap with U.S. rivals. Chinese AI is gaining global adoption as developers turn to cheaper and increasingly capable models. It's just gone 8 a.m. across the Emirates. I'm Abir Abu Omar in Dubai. It's risk on again. In markets, we're seeing everything in the green when it comes to some of the major risk assets that we're tracking. U.S. futures are tilting higher this morning, 1/10 higher. Asian equities are also 1.5% higher. Brent crude, albeit this is a slightly negative story, although it is in the green. And then, of course, the yield on the 10-year notes is something we've been keeping an eye on over the past couple of days or so. But let's turn to equities. The S&P 500 yesterday did close in positive territory after 3 sessions in declines. We talk about AI, we talk about technology every single day, but perhaps yesterday's story was in the healthcare sector, and that is with Moderna, which surged 177%. That is a record, of course, after its phase 3 melanoma vaccine trial with Merck met primary endpoints. Merck was also gaining in the after hours. So you're seeing that really positive news. As a matter of fact, the healthcare sector in the S&P closed at a record high for the second straight day. So a slight change for stories we're watching out for. Asian equities, of course, taking cues from the close in Wall Street. The Kospi was leading gains. So we're seeing gains across the board when it comes to the bond space. Japan's bonds were gaining. Australia and New Zealand doing the same thing after that drop in the yield from the United States, both the 30-year yields and the 10-year yields that were surging to decade highs over the past couple of days or so. Brent crude, 0.2 higher this morning. President Trump vowing that economic D-Day against Iran. Not a lot of clarity, but of course, we will talk about that in just a few moments. And then we continue to monitor the traffic in the Strait of Hormuz, which is still a trickle, nowhere nearly where it was pre-war. But for a deep dive into what is happening in Asian markets this morning, we've got Winnie Su, as usual, for us in Hong Kong. Winnie, what do you have for us this morning?
Yeah, good morning, Abir. As you mentioned, the U.S.'s plan to boost buybacks for the long-dated treasuries really boosting Asian markets today, including bonds and stocks. And for the MSCI Asia here, we are seeing the gauge up about 1.6% after 2 days of declines when we were in that high-yield environment. Now, we are seeing those gains really showing up as the best day in about 2 weeks. And the gains are really being led by the tech sector, as well as the Kospi here, up about 6%. And the top contributor to the region's gain today is in SK Hynix, which is up about 13% here after the company yesterday announced that massive share buyback plan of about $29 billion. And that is coming also as it raised its shareholder return plan to above 50% of its cumulated cash flow. So that really signals to investors that the company is very confident about the earnings going ahead. And a similar move that we saw in Samsung Electronics as well, with a report highlighting a shareholder return plan as well at about $72 billion. Now, flip the board, we take a look at where the bonds are right now, because as you mentioned, seeing quite a relief in Asia, tracking those those gains in treasuries as well. And that is showing up in Japan, Australia, and New Zealand. And also worth pointing out that that's also helping with the bond auction today in Japan for the JGB 20-year, as it saw the demand higher than the 12-month average as well. Back to you, Abir.
All right, Winnie Su in Hong Kong will be back with us for more market updates. Now back to our top story. The Trump administration is shifting its Iran strategy from military pressure to what the president is calling economic warfare. The U.S. president is threatening severe consequences for countries that continue to provide Tehran with an economic lifeline, putting Iran's oil trade and its ties with China firmly in focus. Now this move comes as the UAE said it has cut trade and financial ties with Tehran, and it has been, of course, one of Iran's most important trading partners. For more on these stories, we're now joined by Stuart Livingstone-Wallace, Bloomberg's executive editor for the Middle East, North Africa, and Russia. Now, Stuart, I say these stories because there is so much happening at so many different fronts. But the main thing, or the newest thing that we have, is from President Trump saying economic D-Day, economic warfare, the biggest kind of economic pain any country has faced. Do we have more clarity on what exactly this economic pain will look like beyond those headlines?
No. I mean, in terms of the official statements, quite what's been said privately is a different matter. I do think it's really interesting this week in particular that you've had this massive pivot, and it's definitely towards something that may not actually be, but certainly looks like secondary sanctions. And that's a really big deal because that's in effect taking on China, Turkey, Oman, Uzbekistan, lots and lots of countries that trade with Iran to some extent, or at least have historically. And obviously, as you said, you had that big move from the UAE yesterday. That's hugely significant. It was its biggest trading partner for a number of years. That's going to have a huge impact. So quite how this develops, I mean, that's basically the list of the countries we're going to keep an eye on and see how they react.
Yeah, and just to touch on the UAE, of course, we heard from the foreign ministry, we've heard from the senior advisor to Sheikh Mohammed bin Zayed, Anwar Gargash, yesterday about those financial ties that have been cut from the UAE side when it comes to trade and financials. What impact could that leave on Iran, and not just when it comes to the UAE, but also countries in the region severing those ties?
No, I think it'll be very important because it was a lifeline for sort of basic things like food and electronics and, you know, basic consumer goods. So I think in terms of Iran's isolation economically, that's going to come on top of what is already a very difficult situation. You know, as we've repeatedly said, it's had decades of sanctions. Its currency is at a record low. It's facing hyperinflation. It's got rolling blackouts across the power network. It's a very tricky situation. And if now it literally has no trade with any of its major trading partners, it's really hard to see how they can keep going for certainly several more years, maybe a few weeks. We'll see beyond that.
Yeah, and maybe that is President Trump's ultimate goal in all of this, Stuart. Thank you. As always, that was, of course, Stuart Livingstone-Wallace, Bloomberg's executive editor for the Middle East, North Africa, and Russia. Now, to carry on this conversation, I'm now joined by Dania Arayssi, program head and senior analyst at the New Lines Institute and professor at Georgetown University. Dania, good morning. Good to have you with us this morning, of course. I want to pivot a little bit. Of course, you know, the war in the wider region is happening, but we had some fresh escalations in Syria yesterday from Israel. So the question here really is, do you think that Syria could be a new arena in this wider conflict?
Thank you very much, Javier, for having me on your show this morning. I think the situation in Syria is definitely concerning. We have seen and we've heard from the United States administration taking the lead on de-escalating the existing tensions between Turkey and Israel. Israel have always seen Turkey recently, especially after the Mecca agreement, as a major threat and major insecurity for Syria. And I think it's in the United States' best interest, it's in Turkey and in Syria best interest to have a stability in Syria. And I think the United States has already taken the lead right now on creating a deconflicting zone in Syria to help reduce the tensions and reduce any likelihood for an escalation of a conflict in Syria right now, with Israel continuing attacks on Syria till now.
So that was my next question, Dania. Why do you think those attacks by Israel now, do you think it's trying to stop Turkish troops in Syria or prevent Turkey from essentially shaping Syria's new security parameters?
This is a very good question. There are two main reasons here that really shape the conversations. First of all, the United States has lost a lot of power and influence in the Middle East. It's important to acknowledge this. And Turkey is really in a position where they're trying to establish themselves as a major Muslim Arab country in the regions. That's definitely creating a lot of source of insecurity and threats for Israel. And this is definitely making Israel much more feeling threatened. And this is one element. On top of this, the birth of the Mecca Agreement with Turkey, Saudi Arabia, and Pakistan taking the lead on the security and the stability of the regions, with clear statements from Saudi Arabia and other economies that are not interested in joining the Abraham Accord. All of this together is making the situations and increasing the tensions with Turkey, with Israel, and increasing the tensions with Israel, and pushing Israel toward the point of attacking Syria, because they perceive that Turkey is taking Syria as a proxy in the Middle East, and they do not want to see another proxy of Turkey in the Middle East.
Okay, Dania, but the latest reporting does suggest that Israel said that it agreed to a status quo on security with Syria. How genuine is that really from where you're sitting? Do you think that those are lines that Israel can maintain even if Syria does gain that power that you were just alluding to as a possibility?
That's a very good question. On the position of Israel on those deconflicting of or stability in Syria really came after President Trump has already expressed a growing tension and criticisms with Bibi Netanyahu continue opening multiple battle fronts in the Middle East when it comes to Syria, to Gaza, to Lebanon. Right now, also we've seen what's happening in Lebanon. So those are pressures by President Trump, and particularly I want to be very specific here by Tom Barak. On Israel to kind of de-escalate their attacks. And we've seen also on Twitter, Ambassador Barak mentioned that those attacks are unnecessary escalation from the Israelis. So I would say those are, pressured from the Americans. And I am very skeptical about to what extent Israel can actually maintain those of measures in Syria and avoid attacking Syria.
Okay, Dania, just finally, briefly, just putting this in the perspective or in the context of the bigger war, we're seeing different kind of parallels in the region right now. It's not just Iran, U.S., Israel, it's multiple different fronts. What are the risks of this spilling out and then causing mayhem across the entire Middle East?
The short answer to this one is we do not want to see another country in the regions where we have another conflict. Already we have what's going on in Lebanon, we have Hezbollah, we have the situations in Gaza and in Palestine. So we do not want to see Syria as going or slipping on another conflicting zones. In Syria, it's much more dangerous because you have the issues of the Kurdish in northern Syria, you have the minority situations, and this is something really going to be slipping to another danger zones that you don't want to see happening. So it's really crucial right now for the United States to take the lead on de-escalating and avoiding any conflict in Syria between Turkey and Israel in this region, especially with what's going on in Iran as well.
Dania, thank you for your insights. We're going to have to leave it there this morning. Dania Arayssi, of course, program head and senior analyst at the New Lines Institute and professor at Georgetown University. Now, coming up, Emirates MBD tells us why it is not worried about the rise in long-term treasury yields yet. More details ahead. This is Bloomberg.
The market reaction suggests that this is an important tactical move from the Treasury, a little bit unexpected, so you're probably getting an outsized reaction right now. But I don't think it changes the fundamentals, big fiscal deficits and a Fed on the sidelines, which is what's driving longer-term yields higher.
That was former St. Louis Fed President James Bullard discussing how markets are reacting to the buyback plan announced by the U.S. Treasury. Bonds in Japan, Australia, and New Zealand are all gaining this morning after the announcement buoyed bond market sentiment. So joining us now to discuss all of this and wider market moves is Nick Stadtmiller, Chief Economist and Group Head of Research at Emirates NBD. Nick, good morning.
Good morning.
We've seen what was happening in those surging yields in the United States, the 30-year yields, the 10-year yields to a lower extent, and then a steadying that we saw yesterday after that buyback that was announced. What do you make out of it? Is it essentially a time buying mechanism, or do we need to look at the underlying reasons behind those surging yields?
Well, Scott Bessent's announcement yesterday certainly brought yields down at the long end temporarily, but it's not going to do much to influence the factors that are causing that grind higher, namely overly wide U.S. fiscal borrowing requirements. The U.S. deficit is going to average about 6% of GDP over the next decade. And at the same time, the Treasury is competing with the private sector for long-end issuance, particularly from AI hyperscalers who've been borrowing very aggressively for longer-dated bonds, particularly to finance their long-term data center needs.
And Nick, when it comes to the Fed minutes that we saw yesterday for the July FOMC meeting, 3 members thought we should hike, 2 members did not vote, and they alluded to the fact that maybe they would have said a hike is warranted. Did the minutes or the disclosures yesterday change your mind at all about what could happen in the September meeting?
Not really. We already knew that there were several committee members who are pushing for a hike, and we also know that the rest of the committee is concerned about inflation being too high. But those holdouts are still saying that they think inflation will come back down over the next several months. We've had 2 consecutive CPI prints showing softening inflation pressures. But that August CPI reading, which gets published right before the Fed's September meeting, is going to be crucial to determine what the balance of the committee decision is.
Okay, and then when it comes to the dollar, does the surge that we saw in yield lead you to a conclusion or maybe a thought about maybe this is a broader dollar debasement kind of argument, or is that not something that you're looking at when it comes to the greenback?
Well, higher yields over the last several months have been an important boost for the dollar, particularly as the market started pricing in Fed rate hikes after the oil spike. But there are other structural factors that are supporting the dollar, namely domestic demand in the U.S. is very strong, which tends to be dollar positive. And also there's been enormous foreign interest in buying U.S. equities, which is driving more flows into the dollar. So even if rates come back, those other 2 supportive factors will probably keep the dollar well bid over the next several months.
So do you think that the USD is a release valve at all for those underlying fiscal concerns in the United States?
Well, then you get into a very concerning possibility, which is that investors start to shed treasuries because they're worried about the long-term fiscal sustainability question. And then they also eschew U.S. assets at the same time more broadly, which could cause outflows from the dollar and weaken the greenback. But I just really don't think we're there yet. The moves in Treasury yields and the dollar have been quite gradual compared to what you see when there are significant shifts in investor sentiment. And I don't really think that the fiscal story is going to play out in markets before 2027 and perhaps even later.
Okay. And I was just briefly skimming over Treasury holdings over the past month, and we saw the majority of sovereigns actually sell Treasuries, net selling in Treasuries, especially in Japan, the biggest, of course, Treasury holder. Do you think that trend is set to continue? Do you think that there is danger signs that we should be concerned about when it comes to net selling in Treasuries over the next 6 months?
Well, what's happened over the last couple of months, I think, is pretty specific to Japan and a few other countries, particularly in Asia, where currency weakness in Japan, India, and a couple of other places has been a big worry for policymakers. And what they've done is sell treasuries so that they can sell dollars to support their own currencies. So really, it's a question of dollar strength against those currencies that's driving those treasury sales. And I just don't see that to be a structural factor. And I don't think that it signals that policymakers are worried about their treasury holdings.
Okay, Nick, we're going to have to leave it there with you this morning. But thank you as always always, for your insights. That was, of course, Nick Stadtmiller, Chief Economist and Group Head of Research at Emirates NBD. Now, coming up, tensions flare between Turkey and Israel after strikes on an air base in northern Syria. We're live to Jerusalem with the latest details later this hour. This is Bloomberg. Welcome back to Horizons Middle East and Africa. Bloomberg has learned that a tentative trade deal would lower U.S. tariffs on certain Canadian exports of steel and aluminum to 25% and cut duties on Canadian auto exports to 15%. Sources say it's part of a broader pact that would see Canada drop retaliatory trade measures, and the concession represents a significant win for Canada's auto industry and car makers, including Toyota and Honda, that export vehicles from Canada to the United States.
Can you give us any update on your negotiations with Canada for a trade deal?
Yeah, we had a very good conversation with the Prime Minister last night, and we've come to a deal with Canada. As you know, the 50% tariffs across the board were going on against Canada today, and they called yesterday and they gave us the points that we had to have. Very fair deal for both.
Is the U.S. going to lower tariffs on Canadian autos or
we're doing certain things. We're got to give something, and we're doing certain things. They were paying a high number. We're reducing it a little bit. It's good for everybody.
And North Korea has denied any direct communication between its leader Kim Jong-un and President Trump. The denial comes even as Trump said he expects to meet with Kim this year. A statement from Kim's sister Kim Yo-jong says while relations between the leaders remain excellent, hostile U.S. policies towards the North have not changed. She says Trump's decision to scale down military drills with South Korea is not even worth commenting on. And Moderna shares surged by a record, and Merck gained double digits as a personalized vaccine against the deadliest form of skin cancer showed promise in a large late-stage trial. The Moderna vaccine, combined with Merck's immunity drug Keytruda, prevented melanoma returning after surgery. It is the first positive final-stage trial report for any mRNA-based cancer therapy. Iran has launched a new rail route to transport Iraqi oil products through the country to Turkey and Afghanistan. This is according to the semi-official Fars news agency. The first train carried 50,000 tons of products traveling through Iran's western province, which borders Iraq. Now, a quick look into risk assets before we head to the break. We're still looking at a positive picture when it comes to S&P futures and all other major U.S. gauges. Euro Stoxx 50 futures, however, is dropping 0.2% this morning, pointing to a perhaps negative start in Europe. Now, coming up, amid volatility and disruption in the Middle East, we will look to how sovereign wealth funds are managing the rapidly evolving landscape with TCW Group's Wael Yonan. That conversation is coming up next. This is Bloomberg. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Economic warfare. Trump vows an economic D-Day against Iran as Washington shifts its pressure campaign towards Tehran's finances. The U.S. warns countries providing Iran a lifeline could also face sweeping consequences. Bond buybacks. U.S. Treasury Secretary Scott Bessent makes a fresh attempt to rein in long-term borrowing costs, sending Treasury yields and the dollar down. And the AI race tightens. China's low-cost models are rapidly closing the gap with U.S. rivals. Chinese AI is gaining global adoption as developers turn to cheaper and increasingly capable models. It's just gone 8:30 a.m. across the Emirates. I'm Abir Abu Omar in Dubai. Let's take a quick look again at where markets are sitting at half past. Still, everything is in the green. S&P futures 0.2% higher. Now, that of course follows a positive session in the S&P 500 yesterday after that bond buyback plan that was announced by the Treasury Secretary Scott Bessent that really sent those yields that we've been keeping an eye out on over the past couple of days down significantly. They were, of course, at decades high when it comes to the 10-year notes and the 30-year notes. But in the equity space, while we continuously keep an eye on the stocks gauge, the AI trade, technology stocks, those hyperscalers that are going to continue to be important, yesterday's story was in the healthcare sector. Moderna, 177% record gain, and that is, of course, after that vaccine to treat phase 3 melanoma in its late stage trials with Merck, of course. That sent the stock to the highest or at the highest level ever. And then, of course, that also led to gains across the health care sector that surged for a second straight day to another record high. Asian equities taking their cues, of course, from the close in Wall Street, 1.7% higher. The Kospi, SK Hynix names Winnie will tell us about in just a second. And then Brent crude, $92 on the barrel, gaining by the minute 0.4% higher. The closure in the Strait of Hormuz remains, and we continue to keep an eye on the geopolitical developments, of course. But now for a deeper dive into what has happened over the past 30 minutes in Asian markets, we've got Winnie Su in Hong Kong for us. Winnie?
Yeah, good morning, Abir. Well, it really is that U.S.'s plan to buy back some of those long-dated treasuries that's really boosting Asian markets today, including stocks and bonds. And for the MSCI Asia, we are looking at a gain of about 1.6%, which is actually its best day in about 2 weeks. Now, it really, when you look into the different sectors, I would like to just highlight it for you. We have infotech sector here up more than 3%, the best performing sector today, and also supported by SK Hynix, which is up about more than 10% after the company announced a share buyback plan of about $29 billion. So that's really boosting the optimism there. And following that, as you just mentioned, the second best performing sector here, the healthcare sector, up about 3%. And that is around that breakthrough between Merck and Moderna on the vaccine for the most serious skin cancer. So we are seeing the vaccine related companies as well as biotech names surging in Asia as well. Now, related to the global yields coming back down, that's also affecting some of the sectors here. Material sector up about 2%, driven by the gold-related names because we are seeing gold prices rising about 4% overnight. Plus, really, the drag today here is in the financial sector. Financials falling here after we saw really global yields coming back down. And speaking of yields, we take a look at where the Asia bonds are really trading right now. As you flip the board and see how those gains that we are seeing in Asia are tracking the gains of treasuries. And specifically, we are also highlighting the 20-year yield here after we saw pretty strong demand for the 20-year JGB auction above what we saw compared to the 12-month average. Back to you, Abir.
All right, Winnie Su in Hong Kong with her usual market update. Now, tensions between Turkey and Israel have flared after the latter was reported to have launched airstrikes on an air base in North Syria following a recent visit by a Turkish delegation. Relations between the two nations had already deteriorated in 2024 over the war in Gaza, which saw Ankara severing ties altogether with Israel. So to get more on this story, we now have Dan Williams, who joins us from Jerusalem. Dan, good morning. Good to have you with us. Just an escalation on a different front, essentially, when it comes to this wider war that we're seeing in the region, more upticks of tensions in the wider Middle East. How has Israel responded in that latest sort of flare-up against Syria?
Well, Israel was silent for the better part of that day, Tuesday, when this took place. Then, following the public intervention of a senior U.S. envoy, Tom Barrack, in condemning this action, as he described it, by Israel, something that he said was destabilizing and unnecessary. I'm paraphrasing. The Israelis came out with a cautious statement. It stopped short of explicitly taking a credit or responsibility for this attack. It's worth remembering this attack targeted an empty airbase, a shuttered airbase. No one was hurt. It's fairly clear the Israelis had hoped it would pass quietly, at least away from public view. The Israeli prime minister came about and said that it followed a failed effort to talk the Syrians into not allowing the Turks to set up a troop presence at this base. There's been open condemnation from Syria, from Turkey, a rhetorical escalation. But in terms of changes on the ground, nothing especially dramatic. It does suggest the very delicate triangulation between these three countries.
So, Dan, that begs the question of what do both those nations, Israel and Turkey, really want with Syria, especially at this time?
In short, border security, it's worth remembering that it's only been a year and a half, a bit more, since Turkey emerged from an awful decade-long civil war, the fall of the Assad regime, its replacement by the new regime led by Ashara, a man who has roots in radical Islam. For the Turks, this is an opportunity to stabilize their border with Syria, to ensure that they can stave off threats that they see potentially from the Kurds, also from the mass migration occasioned by that Syrian civil war. For the Israelis, similarly, they were in a technical state of war with the Assad regime. With the new regime, there's slightly better relations, still not peaceful relations. However, for Israel and Turkey, stability and safety look different. Turkey wants a strong centralized government in Damascus. It would appear Israel wants something a bit more piecemeal. It wants to control large areas of its borders with Syria. And as noted, it does worry that the Turkish involvement could eventually bring it to blows with Turkey, a major NATO power, which, as you pointed out in your précis, has been very critical, vehemently critical of Israel's conduct in recent years, certainly around Gaza.
All right, Bloomberg's Dan Williams, of course, with the latest on that latest escalation. Now, moving on to a different story, strategic partnerships are becoming increasingly important for sovereign wealth funds, especially for those in the Gulf region. Despite recent geopolitical volatility, Gulf sovereigns have continued investing actively in an effort to prioritize long-term value creation and reduce risk. So joining me now to discuss this is Wael Yonan, Sovereign Wealth Management Head at TCW Group. Wael, good morning.
Thank you.
Good to have you with us this morning, especially after those 13F filings that we saw recently.
Yes.
But I want to start with a generic question. When it comes to sovereign wealth funds in the region, some of the richest in the world,
yes.
What are the trends that have been set since those geopolitical tensions have been flared?
The sovereign wealth fund landscape as a whole, and sovereign wealth funds in particular, they're sophisticated long-term investors, so this is not something new for them. They're stepping a bit aside from just being capital allocators to being real strategic partners in terms of co-investments, in terms of the different themes that they're investing in. And what is important as we look at is to look at the sovereign wealth fund in the landscape of a much more longer-term investors versus short-term tactical movers.
So would you say that they've turned, surely they are long-term investors, yes, but would you say that their strategy now is turning more defensive or allocating towards those hyped up sort of fields like AI and some of the hyperscalers?
Absolutely. I mean, economic diversification continues to be one of the main objectives of the sovereign wealth funds. And here within the Gulf, we have been seeing it more and more within several of these sovereigns. So as we look at that economic diversification, it is important to look at the themes that will yield longer term or stabilized return for the long term. And that's where some of the themes that you've just mentioned come into place.
Okay. And so I mentioned the 13F filings, yes, and of course we monitor the PIF's activity throughout the quarters. What caught your attention when it comes to Saudi Arabia, especially that the PIF is such a headline grabber every time those disclosures come in?
Absolutely. I mean, it is within the PIF, it is interesting what they're doing, and it shows the evolution of the fund from just being a long-term investor to having the objective of economic diversification under Vision 2030. So within that context, we should look beyond just one number or one snapshot of time to what actually the PIF is doing from both long-term, from both international as well as local investing.
So when it comes to local investing, of course, Saudi Arabia has seen a flood of news over the past few years about those major projects that it's now downsized, and the PIF's involvement there as well. Do you think that the PIF is going to follow that strategy of focusing in on its domestic investments going forward?
So balancing domestic as well as international investments continue to be one of the main objectives of a sovereign. And within the PIF, we're seeing them doing that in terms of creating that balance across both local as well as international investments and what makes sense for them from an economic transformation perspective.
Okay, and so when it comes to the general picture, we're talking about the ADIAs, the Mubadalas, the PIFs, and the QIAs. Do you see, I know that we spoke about the long-term vision of the nature of how these funds operate.
Yes.
But then the geopolitical situation in the Middle East, do you think that that's turned them towards more U.S. exposure, generally speaking, aside from, talking about the PIF and its domestic interests?
Given the short-term angle of what we're dealing with, it's very hard to say from a long-term perspective whether that is going to result in a strategic asset allocation shift or not. What we know is that the Gulf region has deep balance sheets. And so far, the economies have been very resilient in terms of what is happening locally. So you've seen that within the capital allocations that has been happening. You see that in terms of capital flow that the sovereigns have been putting into the system. So it is hard to tell on a short-term perspective what could that result or yield in.
Okay, so given everything you just mentioned to me, Wael, if you were advising those sovereign wealth funds, or maybe advising is a big word, if you were sitting with them and having a chat about where to allocate right now, where should these funds allocate strategically?
Absolutely. I mean, a lot of them are already doing that across several different themes, AI being one of them, technology being another. If you look at the liquid markets from a fixed income perspective, it's becoming more and more favorable given where yields are today. So we shouldn't forget that liquidity continues to be one of the big angles that sovereigns look at depending on the objective of the sovereign. And another element becomes the thematic angle of achieving shorter-term returns in terms of for achieving a longer-term objectives.
All right, well, really, really insightful remarks about a very important thing that we monitor in this region. Thank you for your time this morning. That was, of course, Wael Yonan, Sovereign Wealth Fund Management Head at TCW Group. Now, coming up, Ethiopia burns through billions of dollars as it looks to stem the sell-off in its currency. More details on that story next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. Ethiopia is burning through billions of dollars in a frantic and so far unsuccessful bid to stem the sell-off in its currency. The nation's central bank has said it will sell another $500 million today, describing the unscheduled sale as a, quote, special auction. So let's get more on this story, of course, from Bloomberg's Jennifer Zapasaja in Johannesburg. Jen, what's essentially caused this repeat intervention by the Ethiopian Central Bank?
Well, Birr, at the heart of it, it's really to defend the Ethiopian birr, which, if you take a look at the currencies that are tracked by Bloomberg, it's the worst performer among the 23 African currencies against the dollar this year. And so the birr has had quite a difficult year, a weak performance at this point in time. Analysts do expect that the birr could weaken even further. So that's one part of it. They are looking to at least defend the currency from weakening any further. There's also, as you were just pointing out there was that special auction that we heard about. There's a lack of foreign exchange, which has been putting pressure on the currency. And so that has compounded to really create a bit of a dilemma for officials there in Ethiopia. And then, of course, we have to take a look at what we've seen over the past few months with the conflict in the Middle East, the pressure that has put on foreign exchange, and especially for a country that relies on imports of fuel and also fertilizer, which has caused even more of a deficit and pressure for the Ethiopian birr. And so all of these primary causes combined have really created a situation in which, as you were just pointing out in the intro there, we're seeing foreign exchange really burned through and a bit unsuccessfully based on some of our analysis, especially when you look at what is to come moving ahead.
And that's exactly the next question, Jen, right? Because you mentioned everything that's been happening and what's been leading to this weakness. But then what is the expectation once this intervention happens? And could we see some more upside from now on?
Well, Bloomberg spoke to a few analysts which are actually anticipating that the Birr could weaken even further, which is what I was just mentioning there. So right now, some of the analysts are actually expecting we could see numbers in the range between 185 to 195 Birr to the dollar. Right now, it's right about 163. And some analysts even expect potentially it could go even higher than that before potentially we see some intervention if it does get even closer to that 200 level. Not just that, we do have Ethiopian New Year, which is coming up at the beginning of September. That could create, again, further pressure on the currency. And so these factors combined, it's looking like a bit of a bearish outlook right now. But we're watching closely for what officials do in the interim, especially if we do continue to see the country continue to push forward with some of their own fiscal plans, which, at least from our projections, could create even more of a deficit in terms of what they're able to get from foreign exchange. So it's a bit of a precarious time when you look at the currency there in Ethiopia. But the question will be, what do officials then do to step in if they do choose to?
Right. Jen, thank you so much for keeping on top of that story for us. Jennifer Zabasadra, our chief Africa correspondent in Johannesburg. Now, for a look at some of the other stories that we're following this morning, the United Nations has voiced concerns at reports of Zambian opposition members being detained during its August 13 election. Authorities stormed the main opposition leader's house on the night of the vote, leading to a shootout and 11 arrests over what they alleged to be an insurrection plot. Observers raised questions about the fairness of the ballot that saw incumbent President Hakainde Hichilema return to power. And South African annual inflation eased more than expected in July. Consumer prices rose 4.3% compared with 5% in June, slower than the median estimate of 4.5%. The report now hardens the argument for the central bank to keep interest rates on hold as it assesses the fallout from the war in Iran. And coming up, China is rapidly closing the gap in its AI race with the United States, and in some cases, it even is taking the lead. We will dive deeper into that story next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. China is closing the AI gap with the U.S. and by several key metrics, usage and cost, it's even taking the lead. The rapid ascent is now raising concerns for firms such as OpenAI and Anthropic, which are chasing trillion-dollar valuations based on assumptions about superior capabilities and money-making prospects. Let's get more on this story now from our Bloomberg Asia technology reporter, Les Deng, who co-wrote today's Big Take. Les, good morning. Great story. When it comes to China making this leap, how is it essentially making this advance? Can you tell us more about that?
Yes, of course. Thanks for having me. So, of course, they are making the lead in terms of, first off, it's gaining more users with its very cheap price and growingly capable models. As we can see from the user data, that Chinese models are gaining more token usage on a major platform, Open Router, exceeding over 60% of overall use on the platform in July. And then, of course, a lot of major U.S. tech firms also adopted the model. It's important to note that most of China's top models are open weight, meaning that they can be downloaded and deployed everywhere, anywhere. So it offers some certain of freedom and then also reduce some of the risk concerns of using Chinese technology. You don't have to send your data to China to use these models. So that's one of the benefits.
Okay, and Bloomberg also did a customized test to compare how these models perform in real-life scenarios. What did you find?
Yes, so we asked 7 of the leading models to built us a coffee shop website called Bloomberg, pun very intended. And then all of them were able to build fully functional websites, but the costs are very different. Anthropic's Cloud Fable 5 were able to build a very polished website within an hour with the bill of about $50. It's already cheap for a website, but then if you use China's moonshots, Kimi K3, you can build a similar website with just a quarter of the price. You can also go even cheaper for, let's say, less than $5 if you use some of the Chinese best models like Alibaba's Queen or a budget option from OpenAI.
Okay, let's just briefly, when it comes to the serious question about whether China's AI will actually end up beating U.S. technology, did you find that that is a very possible or a very probable conclusion?
Yeah, from our reporting that we know that Chinese companies, they face very limited resources in terms of hardware. The U.S. export controls has banned Chinese companies from accessing the best NVIDIA GPUs. So that hardware constraint is going to continue to possibly in the short term have Chinese models be behind U.S. ones. Yes.
Okay, Les, thank you so much, and really fascinating reporting, of course. Bloomberg's Les Ding there. Now, before we head to the break, a quick look at where risk assets are sitting at the end of our show. S&P futures continuing in the green, NASDAQ 100 futures 0.4 higher, Dow Jones not doing as well, flat to the upside, and then Euro Stoxx 50 futures pointing to a lower open later today in Europe. And of course, Brent crude prices and NY crude continue to rise as the escalations in the Middle East continue, and that economic warfare plan by President Trump is set to take place. But that is it for Horizons Middle East and Africa today. Keep it here with us for Daybreak Europe. This is Bloomberg.